This is Lacy Robertson, the hardest working woman in mortgage and real estate nationwide, and I'm here to give you a list of 14 things not to do when you're applying for a mortgage. Look, I know you're super excited, you're getting ready, or you've already applied for a mortgage, you're getting ready to purchase a piece of property, and guess what? And all the excitement, sometimes if you're not careful, you'll do something that can be very damaging for you. So I want to share 14 things for you not to do when you're applying for a mortgage. Listen, your mortgage broker, if it's not me, and it should be, but if it's not me, will thank you. Okay, for those who just watch my channel and they're already in the process of buying something and they come across this video. Okay, number one, don't change jobs or income sources. Okay, you're thinking about changing a job. Listen, be very careful. You don't want to do that in the middle of you applying for a mortgage. It can be very damaging. Like it can show instability with the lender. The pay structure may be different. God forbid, it's a whole different industry. We may cannot use that income until you can prove that you've had that type of income for 2 years. So number one, don't change jobs or income sources. Number two, don't make large purchases. Listen, don't buy the car and the furniture and the electronics and the appliances. You haven't closed on the home yet. Just wait till you get the home. Wait till I call you and say, congratulations, you are now the new owner of 123 Victory Street. Wait until that happens. Two, don't make any large purchases. Number three, this is huge. You go to the store and you're shopping, and maybe you're at a department store or something, and they say, hey, do you want to apply for a credit card? You'll get 15% off your purchase. No, don't open new credit accounts. Listen, I have pre-approved you for the debt that you have currently and the minimum payments. Please, please, please. You've applied for a mortgage. You got a pre-approval, or you're getting ready to apply and get a pre-qualification or pre-approval. Don't open no new accounts. That can really uh, hurt your transaction, right? It can trigger additional hard inquiries, drop in your credit score. It can increase the risk, and maybe the lender won't like that. The underwriter won't like that. So don't open new accounts. Listen, if you can't afford to buy that item without that extra 15%, wait till after closing, okay? And then you can do that. Number four, don't close existing accounts. Contrary to popular belief, okay? People think, oh, if I close accounts, it won't hurt me. No, sometimes closing accounts really drops your score. Why? Because it changes your credit card utilization ratio. You don't want to do that. It also will change or shorten your credit history depending on if you're closing the longest account that you may have. So you don't want to hurt your credit score. Keep those accounts open. If you paid them off, it's not hurting you. So keep them the way they are. Number five. Now, this seems like it's go figure, but believe it or not, it's on my list because somebody has missed a few payments after they're applying for a mortgage. Don't miss any bills or have late payments, okay? Continue to pay your credit cards on time. Continue to pay your loans, your car payments on time. Now, let me tell you how sometimes this happens on accident. Let's say you're doing a refinance and you are going to pay off all your debt or some of your debt during the refinance, right? I will have clients call me and say, well, I'm paying off my debt in this refinance. My payment is due in like 2 days. Do I pay it? My answer is a resounding yes, pay it. Make your payments the way you normally would make them Make the minimum payment. Maybe you would pay a little bit more. It's okay to make the minimum payment since you know that we're going to pay off that bill altogether. But some people will get missed payments on or derogatory uh, marks on their credit report because they didn't pay that bill. And what if we have to delay closing? Not with me, but maybe with someone else. If we have to delay closing, or maybe we're closing close to a holiday and won't record the same day, it'll record the next day. You want to make sure you don't have any late payments, okay? So continue to pay those bills as contractually promised that you would pay them, and you'll be fine. Number 6, listen, don't move around money without documentation. You're selling money from one account to another, you're transferring money, writing a check to this account and all that. Don't be moving money around without documentation. It raises red flags. We're like, okay, where did this money come from? Don't tell me it came up from under your mattress. No. We have to verify deposits into your account. So make sure you're not moving money without documentation. Now, if you get a check, I don't know, let's say for an insurance policy, or you're buying a house and you've already requested the funds from your retirement account. Look, we can track that. So if you get $30,000 to help you purchase a piece of property from your retirement account. You have the paperwork where you applied for these funds. You'll have the check that it'll say whatever retirement account you have, and they're giving you the money. Listen, that's fine. Why? Because we can document it. But don't be moving money around and we don't have documentation to back it up, okay? Because money can't just appear in your account and we don't know where it's from. Number 7, don't assume because you're pre-approved that you're going to have the final loan, right? A pre-approval is always conditional. When we issue a pre-approval, it is contingent upon you providing all the conditions so we can finalize your loan. Okay, so it has to go through an underwriting process, and we have to verify whatever income you put on that application. It has to be verified usually by 2 sources, your pay stub and then proof of receipt, your bank statement. Sometimes if you're self-employed, it's a P&L statement, perhaps, along with bank statements showing proof of receipt, or a tax return showing proof of receipt. So whatever it is, don't assume just because you have a pre-approval, it's good as gold. Okay, not until you get that final loan approval and all conditions are removed, you're good to go. That's why you don't want to make all these unnecessary purchases or do anything else on this list that I'm sharing today. Okay, number 8. Oh, this is a huge one. Look, I say this should be a no-no no matter what. But we're talking about if you're applying for a mortgage loan, so I got to stick with this subject at hand. Look, if you're applying for a loan, don't co-sign for anyone else on a loan, on a credit card. I don't care how bad they have a upside down smile and they're like in distress. No, 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 no. Co-signing adds debt to your credit profile. And if you're not responsible for making the payments, it'll make you responsible, because if that person doesn't make that payment, guess what? You co-sign, it goes on your credit profile, and you're ultimately going to be responsible to make that payment, or you will get that derogatory late payment just because you co-sign. So it's a no. It's a no, and that should be for anything, not just if you're applying for something. But anyways, number 8 is don't co-sign for any loans or credit for anyone else. Number 9, listen, as a mortgage lender, it is important, a mortgage broker, it's important that we stay in communication. My clients know I'm accessible. You can email me, which I prefer. You can text me, which is okay. You can call me, which is okay. Whatever it is, we have to stay connected, right? I don't ignore any requests from me. If I need an updated pay stub, updated bank statement, I got a question. The underwriter has a question about something. Look, don't ignore my request. I'm never going to ask you for something that I don't need. Did you hear what I said? I'll never ask you for something I don't need. If I'm asking you for something, maybe I'm asking you for clarification or I need something to satisfy the underwriter. Listen, don't ignore my requests. They're important. If you ignore it, it can cause your loan to be denied. Okay. It can kill your application. Number 10. Ooh, this is big. Don't max out your credit cards. When you max out your credit cards and now you have these high balances, it increases your credit utilization and it can affect your credit score negatively. So you don't want to max out your credit cards. As a matter of fact, hide them. I'm not going to say cut them up. You don't have to cut them up, but hide them. Maybe don't use them during the process, right? Um, but but if you use them sparingly. Okay. I don't want you to max out your cards or make payments where you're dropping that balance down. Okay. Number 11, don't apply for other loans during the process. Similar to credit cards, right? I don't want you applying for new debt. I don't want you applying for new debt. Wait, don't apply for no personal loans, no student loans, no buy now, pay later, those Klarnas, all those things out there, Amazon, buy now, pay later, all these things. You don't want to do that. It can change your eligibility. It can change your pre-approval. It can negatively affect your credit report because there's credit inquiries. It can change your whole credit profile. Don't apply for any other debt, personal loans, student loans, buy now, pay later type things. Don't apply for those during the process. Again, wait till closing. I know you're excited. You want to buy these things. You are like, oh, I see that. That'll be awesome in the house. Just wait. Number 12, don't make undocumented cash deposits, right? So I told you about moving money around, but also if you have cash, let's say I had a client recently. They had some cash deposits and I called them and I'm like, oh, can you let me know what these cash deposits are? And one day actually had a birthday. So one of the bank statements they provided me, they had some Zelle payments and also some cash payments. It was birthday money she received. Perfect. Okay. We can make an explanation and say this was birthday money. They got her ID. Yes, her birthday was in that month. No problem. But just large cash deposits or cash deposits in general, want to make sure that we have documentation that supports it. Okay. Number 13, don't assume that the lowest rate is always the best rate available for you. Okay. The lowest rate, it could be, you may get a higher rate than someone else, maybe because of your credit score, maybe because of your total profile, your debt to income ratio. So don't think it's strange, right? Sometimes the lowest rate people buy down rates, right? So there's fees and points and loan terms. You can have a 15-year mortgage, a 30 or 40-year mortgage, and the rates associated for the same person for whether it's 15, 30, or 40 years or whatever term, the rate can be different for those different options. Okay. So don't assume the lowest rate is always the best deal. Sometimes it's better to kind of whether you shop around or just think, what, maybe I'm not going to pay all these points and fees. I'll take this a little higher rate because I can keep that money in my pocket. Okay. And then number 14, don't hide financial information. Look, lenders they use sophisticated tools and software. They do good underwriters find discrepancies. So it's best to be upfront to avoid delays and denials. You don't want to get close to the end of the closing table at the closing table, and then an underwriter finds something that you were trying to hide. Okay, so that's my list of 14 things of what not to do if you're applying for a mortgage loan. Now, I'm Lacy Robertson, the hardest working woman in mortgage and real estate nationwide. I'm going to put in the description how you can apply for a mortgage with me. Now, I look forward to working with you and for you. And until then, I want you to have a blessed day. Bye bye.